Hey guys, how's it? Hi Sib, hi Sib. We're good. Thank you. We are going to chop the London session. Um, I'm just have to look first at what's happening on the economic calendar side, and there is not too much news coming through that I have noticed or that is expected to come through. So in that instance, one is expecting a pretty quiet, um, extremely quiet balance of the London session. Tomorrow is going to be a very good market. I think I'm arranging that tomorrow one should be ready and waiting for and do a session on the New York session for late because of the Fed policy statement, monetary policy statement, and the interest rate decision. So it's going to be chock-a-block tomorrow in the markets at 8 p.m. South African time. So one is looking towards that. All right. So currently looking at the London session, one is not expecting too much today. So there we go. They've just finished. There's not been very too much news. We're expecting just from 2:15. That's going to be the big speech from Governor Bailey's speech, the governor of the Bank of England. We don't know about this. I don't know what the speech is going to be about, but from there we have got some retail sales data coming through from the US. So between now and the New York session, one does not expect lots and lots of news. So in this case, one expects that the market should be pretty much flocking and flowing the way it usually does. So I'd love to look at the pound pairs and just to see what have they got in store for us. So one would just be looking at the pound pairs. I don't think there's anything worthy to be traded currently, just needs to be observed, unless if you are already on some trades, then you can look at some. So but currently quiet session. Let's see if we can get some breakouts for the London session. Right. Let me just share the screen. Right. Right. I am monitoring, have been monitoring, and still would be monitoring the movement of the pound. It does not look like there's just way too much to write home about. I've got the pound against the Japanese yen, where the price has shown that it's broken to the upside, but it's a soft break currently. Very soft break. You know, there it is. It falls. It's trying to hold on to that. It's trying to hold on to this resistance. I think it looks like there's a lot of bias. There's some form of order block or some rejection, from the buyers right there, trying to show everybody that this is the legitimate point that they've earned. Both sides, from the pivot point side and also from the trend line side. That's what the GBP. I think that's going to be an opportunity there, but one needs to just keep watching if they would be able to move up. There are some buyers and some serious order blocks there. Breakout traders, I think that could be a very nice opportunity for breakout trading right there. Looking at on H1 is much clearer. There has been lots of fight. That's a very nice bullish pin bars. You can see the wicks that are there. A lot of buyers kind of blocking this area and wanting to push the price upside. There's also a lot of sellers on the other side. You can see also that kind of a wick coming from that bearish candle on an H1 basis. So that's what we're looking for. That's a gravestone doji there. That spinning top could cause some problems. That's what we're looking at. breakout on the GBP JPY at the beginning of the session. Will it continue? Also kind of looking on what this is holding there. It's a potential head and shoulder pattern, right, which has already touched the fib zone within as the right shoulder, but this shoulder is forming big fight. Broke out the neckline, came back inside again. That's how the fight, intense the fight can get. So it looks pretty much like this. Still negative, but there's a lot of fighting. I would suggest that the GBP USD looks bullish kind of for me. I would just go with the bullish sentiment right now, waiting for the price to break the neckline. Once the neckline is broken, one expects that kind of momentum to be coming back into this price. I think the price, I don't see the price or the sellers pushing the price below the fib zone there. So that's what I don't expect that it could happen. So I think the buyers are poised right nicely at that 1.40. It's not a breakout, as you know. Like I said, there's no breakout on the GBP USD, but the breakout is witnessed on the GBP JPY. On the GBP yen, I think that's gonna be for me the point at which I could expect that these guys could take the price to the upside, right to that. They could break because the GBP JPY has already broken their channel. Remember, that's how we look at the market. These guys have already broken, they took the price similarly. There's the same pattern that has formed. There's the same pattern that has formed yesterday. I was riding on this channel yesterday, bought there and bought on a temporary basis, on a short-term basis, bought this shoulder again and left at the neckline. So seems to be, see, there you go. They could be wanting to be fighting legitimately for that if they use wicks to say, no, we are not out of it. But when you use the neckline theory there, these guys have claimed that, no, we have cleared the neckline. We should be allowed to go to the upside again. Will they be allowed? We don't know, but that is what they are fighting. The sellers are fighting for the technical levels, to say it was a trap. We were not kicked out. We are still holding to the resistance if we use that kind of resistance of the wicks only. But if you use a line chart resistance, you may find that resistance is broken and the price is trying to use it as support if you use the line chart. So the line chart shows that the resistance is way broken by my mile. It's not a technical one, but the candles are suggesting otherwise. So that's why sometimes I prefer that we just wait for a confirmation from both the candlesticks and the line chart. So just a matter of time to wait. So GBP JPY kind of bullish, leading the GBP USD that is still subdued to the downside on the similar pattern. Did not do what the GBP JPY did yesterday, and it could be wanting to either come there or come back to the same similar like ahead, but that's a very strong support. That's where the GBP came from. That could be what it wants to do. So like I said again, whether you can trade this London session as a profitable session, I doubt it's a profitable session, but things looks bullish for them. I must just emphasize, currently still kind of looking bullish for them. They should definitely be able to enjoy the bias or the sentiments of bulls, and then hopefully there it is, and hopefully take that to the upside, to the fading levels. I'm looking at and monitoring it on M15 and see if there could be a breakout. So I would suggest that if you're a breakout trader, just wait for the neckline 1.14125250, just the M15 M30 neckline of the inverse head and shoulder pattern, M15 M30. And once it breaks out, oh, beautiful indeed, then one expects to go right up to the top. There's about 60 pips. Break the neckline and move 60 pips. Some of you, it could be just enough for the day, and then they can just rest everything. But it's not the signal yet. The GBP JPY is also battling there, so they may just be keeping themselves inside the zone, waiting for the GBP USD to go to the downside and then break to the upside. You can see that euro is giving pressure. Euro is the one giving pressure to the pound. It broke out, then the euro leading. There it is. Euro is the one to lead. Now euro broke out from its own. Euro broke out from the heads and shoulder right there. Right, let me just, I think that's a beautiful, beautiful setup that one could consider also. Beautiful inverse and head and shoulder pattern. This pattern is going to delay the strength of the pound. In this case, euro is taking the glory now. There's the very, very beautiful breakout. Even if I can use the candle, is this breaking out. You can see that candle that is busy right now on this 30 minutes seems to be breaking out. So the pound could either let it go or block it or take it back inside, like what it has happened against the GBP/USD right now. So we are witnessing a breakout right now. We are just watching the breakout of the Euro GBP, the pound there losing slightly against or letting go about on their strength and the hold on the euro. Remember that euro is already pushing against the, there it is. It's beautiful. That's definitely gonna go. Okay, so then where is it gonna go? I think it's pretty clear that this is gonna be a beautiful head and shoulder. I think I will go for it by using that. When it breaks the neckline, then you're gonna make the same. So break this point, use the top, then there it is. That's where the TP is expected at. Beautiful market there on M30, another scalping moment there. By the breakout, get out at the 36 points, 40 pips, and the stop loss right below the neckline. Many traps there, by the way. Even if you can buy this, but there's a lot of traps there, just about 10 pips. So 10 for 35. So 1:3. So I think that's how one could look at it. I think the opportunity is therefore on the euro side. In this case, if this would be your stop loss range, stop loss just below final leg line. Then from there, go to the upside for 40 pips. There's an opportunity recommended. Just if you're trading pure price action, no indicator. That's exactly what you could be looking at. Just about 40 pips there. Beautiful, beautiful price. There's the support holding the price to prove that this neckline is legit. Must be a fib zone. Holding right there. 30 pips to go. 40, just about 10 pips. 10 pips to put the stop loss. Very good for scalpers. For scalpers and short-term traders. That's what you're looking at. Could go because you can look, there's just not much here to really rather go with. So that's why I'm looking at M30, M15 to say that this could be a better look from the 30 pips, but that's not what we could be interested in ourselves. So that's one of the things that we're looking at. That could be in the bag. Spread, rather screenshot it and see whether we can have the before and after the London session. 30 pips is possible just before the session can finish. 30 pips, 60 pips is possible. So while GBP and USD are fighting, then the euro breaks out, then we'll go to a euro portfolio, then just see what's happening there. Then the euro breaks out. So the euro in that case then breaks out completely from the being held by the euro, rather by the pound. So in this case, it could delay the strength of the pound there. So that's what we are monitoring. Beautiful market. That's a breakout. All right, let me just, for those who are just joining us, we are witnessing a potential breakout of the neckline. Right. Bullish breakout. Euro bullish breakout. Okay. So that's what we are monitoring, Like I said, screenshot it, wait and see what would happen next. But we are we are monitoring a Euro GBP bullish breakout in the session. So could be something that if you have not done pretty well, so if you're a scalper, perhaps it's a good opportunity for you to take something here from this point. So could be at the end of the session, and then perhaps before the end of the session, 30 pips is better than nothing if you're a scalper. So that's what we're looking at right now. Breakout of the euro. So let's go check what's up in the euro. Before we do that, I wanted to look at the pound and the Swiss franc. There is also a potential head and shoulder there. It's not like I'm looking for them. They are just presenting themselves. Here is another one, not ready yet. So it's now the third of these four currency pairs. This is now the third. What I'm just seeing is that I'm seeing that the pound is the one that is ready to launch to go to the upside, but the euro, but there is some form of a competition between the pound and the euro on who will break out first. So there's really nothing wrong with the pound. The pound seems like it wants to go up, but then it was about between the pound and the euro who will go out first. So in this case, euro has already gone out first, chasing and refusing the pound to be breaking out from that point. There is the drop. I'll tell you this drop. This drop is caused by the drop of the US dollar Swiss franc. The dollar Swiss franc is dropping. In this case, it is just the strength of the Swiss franc causing this problem. So the dollar Swiss franc is dropping, so is the GBP Swiss franc, extending now therefore the shoulder. But I think they should be able to hold this shoulder. I don't doubt that they should be. I think the dollar should and could be able to hold to this shoulder. They've been thrown here several times, but I think they should be able to hold it. But again, this is the market. We'll hope to see what will come out from this. I'm on H1 time frame, and should this work, it's going to be this one even promises a more parabolic move to the upside. So in this case, one is expecting that it should be breaking, taking the fibs, using the wave, the neck, the resistance where the neck will break. So one is expecting the price could hold that demand area, right shoulder, then pushes up to there first, and it could even go higher. So we're looking at a daily time frame. So that's what the dollar is preparing. That's what the dollar is cooking, or the pound rather. So the pound is cooking some nice meals there, but the neckline has been completely defiant. The sellers have been completely defiant around the neckline, never wanting it to break up to the upside. But the cooking does not stop. There is the cooking. The cooking does not stop. This one materialized yesterday, similar pattern, okay? And then there it's holding there. It's holding the neckline nicely, support. GBP USD is now going to there. It's now still holding the similar pattern, head and shoulder, inverse head and shoulder, and it's now holding the right shoulder pretty well. GBP Swiss franc holding the right several times. I mean, it's been here now third time, once, twice, 3 times, 4 times, 5 times. It has been here now for the 5th time and holding that right shoulder pretty well. So before the end of the session, keep monitoring these, before the end of the London session, before the beginning of the New York, perhaps the pound during, after the sleeping or the closing of the Tokyo around 11 o'clock, perhaps it's just going to be purely the London session that would be having the right of way. Who knows? Perhaps the market there can just start pumping more into this market. Big selling there for the Swiss taking it, the euro taking it. So it's Europe against, this is a Brexit affair. It's a serious Europe affair against the UK, against the Great Britain. So euro seems to be doing extremely well there. Let's go check what euro is doing. Euro is doing very, very, very well there. There you go. All right, that's the first one. You can see this push that we've just analyzed on the Euro GBP on an H4 level. There it is. So it completely cleared the zone. So should be happy there. So if they don't, if anything could push it, they could be using the this resistance, but I think the one that I've just drawn there is fine. That's one. Euro dollar similarly, all right, there is a push there of the euro Swiss franc. This one, I'm on it, riding with it. I'm not gonna share it now. But two euro GBPs there, wanted euro dollar, and then euro dollar. All right, you can see that there was a push. Now that pullback can cause there's the euro dollar for you. This is the candle that caused that drop of, or that breakout of the euro GBP, and now they are coming back. So we're still gonna be seeing, or we are likely to see the situation where this could have come to an end. Let me just quickly check that for you. Euro just wanted to make some final moves there. That's gonna be a wave number 5. It should be retracing, should be pulling back completely. That's beautiful there, sell of the euro. So in this case, this fall of the euro should and could be breaking the beautiful opportunity for the pound now to launch to the upside. You can see that's a nice rejection. And from what I'm seeing a 1, 2, 3, 4 formation. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Beautiful 5 impulse wave right there. You know, sending the price of the US dollar to just go and look for some more friends there. Should be bottled within this channel. Right, so in this case, we're just going to be waiting if the euro dollar would be able to hold at least until the New York session. But it is part of the session. Remember, the euro is still part of this. Will it break? But this is not a pattern or a structure that is good, especially when the euro looks like it's finishing this structure. So perhaps euro would stay within this channel, this wedge, for the rest of the channel. But if it breaks this, then it's quite negative in the meantime for the euro. So that's what we're monitoring. So euro dropping, I think that drop should be giving the pound the opportunity now to take the stage. Right, let's see if it's dropping against the GBP. Remember this one, right? We said it now broke to they're using this kind of support right now. So euro is highly likely to be dropping against the dollar and still go up against the pound. It's still possible. That's a leader follower. So it could still lead during the London session. It's also London Euro session. So it could still lead the strength in the zone, and then the pound could be following it and hold that sequence until the New York session. So the bigger strength goes to euro, and then the pound follows, and they both could be just holding their gains against the US dollar. Excuse me. That's how it is. I don't know if there's any other thing that you would like us to chop nicely for you. If you'd like us to look at any other pair or index within the London session, let us know. We are ready. Drop it there. Okay. Anybody, what are you looking at? Try to make it to be relevant to the London session. During London session, we are looking at Europe. We are looking at European stocks. We are looking at the UK. We are looking at Brexit. The Brexit. You know, the Brexit fundamentals. You know, France, Italy, Germany, Sweden. So just like that. So what do you have? What would you like us to look at? As you are waiting for that, I've just got something on Hot Forex there that I would like to share with you in one of my charts. Just want to show you, but still I can show it there. I can just show you that we know that, and we appreciate your following of our charts on Let There Be Pips and on Opulence FX. We know that you appreciate them. One of the oldest charts that we have kept for many years, it's the euro dollar time cycle or cycle analysis. All right, so please, this chart is still very valid. I'm seeing many people trying It's fine. I think they've got their own way. Anybody trying to short euro dollar, you are very opportunistic. It's okay, not a problem, because according to our analysis, the euro dollar it's now entered the distribution zone. There is the distribution. So when you use the Wyckoff theory, so we've been just monitoring this from 2015. When I say 2015, I'm serious. I've held this chart for 6 years, moved from broker to broker. There was the accumulation. The markup cycle has come now. And then there it is. And then from there, a distribution that usually looks like it's going to be a 2 months or a 1 month distribution, almost 6 weeks in January 2018, dropped markdown. And then 2021, I just want you to notice I've not discussed this with any person, including the guys that are on our preview. So because of the delay in January 2020, for the markup cycle, it did not start at the right time. It was supposed to just go up right there. Oh, thank you. Oh, sorry guys, screen was not shared. It's me again with my screen. Okay, I was speaking about the euro dollar long term, which is the cycles. It's not just the price cycles, it's also the time cycles. These cycles are not done by any form of indicator, but they're just based on pure price, just to read the cycles in the market, not the teaching that I'm doing, but this is something that for me is an indicator for euro dollar for the past, like I said, from 2015, just monitoring the euro dollar. It has respected this kind of cycle, market cycles, and it is still respecting it. So until such time that it doesn't respect it, like copper has done, I'm still gonna stick to that. So every time it is relevant. We moved from January 2015, the price dropped heavily from that drop. And then from there, I was part of that drop, by the way. I was teaching at the GFI when the price dropped first from the 1.38 to this level. And that's when many people were talking about parity. Remember parity, the parity between the euro and the dollar, close to parity. We could say technically we reached the parity because it went up to 1.03. We are now at 1.21. Used to discuss this a lot with Kuoba's camp and with George. May God bless his soul. So in this case, there's the accumulation. I knew it was accumulating there, gave us the M pattern there, gave us a rise. That's the triple, that's the wave that started it. Gapped up there in 2017, just around February, Q1 of 2017, moved up. And then Silas, the indicator there, he was in Polokwane, sold in January 2018. I remember Silas selling this, coming to one of our reviews and say, Coach, I already sold. I said, hey, I'm waiting for a sign. The price stayed there in January 2018. Silas selling there as a portfolio manager, selling there in January 2018, the price dropping. We monitored this point. There was the gap up of 2017. This gap was closed in 2019. Right, in July, there's the gap closing there. I remember again from this one, we knew that the price was going to shoot up. So there was a bit of a delay. There was a bit of a delay of the markup cycles there. And with lots of volatility, it wanted to launch there. But the drop was such a pain. The drop from the price 1.14 when we were in a markup cycle to drop to below, the markdown cycle. It was such a pain. The gap was closed. The price went up and the market makers pushed the price back again by about 1,000 pips, 2 weeks in a row, pushing it down. They dampened our spirits completely. Then they made another launch there. So the markup cycle, we are just going to make a correction there. The markup cycle then was delayed by just about 4 weeks, a month. So instead of taking off in January, then it officially kind of took off somewhere in March. Yeah, in March, two more months in March. So because we started it in March, which is the Q2 of 2022, then we can then adjust the distribution cycle. You can see there's a bit of delay, but trust me, it is still a bullish market. Even these heads and shoulders, because of cycles, they may not play out because we are playing within a cycle. So we need to be distributing somewhere in January 2021, and the price of distribution should be somewhere between 1.29 and 1.26. So we should be distributing. So euro dollar should be distributing in around June, July, latest up to August. So the euro dollar, the reason why euro dollar is refusing to fall this much is because of the cycle. Those who invested in this cycle have still not made their money, and they will be distributing the euros somewhere when the price is around 1.26 and 1.29. The highest distribution price will be 1.29. This is already June. That's what I'm talking about. That I'm talking about this deliberately in this cycle. I think, Silas, we could have invited more people to see how this is done. How this is done. So this is very important. So in this case, we're looking at this wake of cycles. It's not many that have got them. So I'm just sharing with you exclusively right now. If you're joining us for the first time, this is what we've been cooking. We don't trade charts that we just did this morning. This chart is just about 6 years old, and the market euro dollar is still moving according to it. So we are now in terms of time, this is June 2021, and this is the distribution period. But because of what happened in January, between January and March, we then adjust the between June and August, June, July, August. So the price could then be there between June and August. So you can put it like that, then June to August. So will be distribution period. June, we still are to finish still have got to finish the markup cycle. So you can see that this still looks bullish. That's a small correction there, and the price is ready to rally again. Let me just show you. Definitely looks like the euro is ready to. There's the impulse bullish wave, and we can see that most of the waves are impulse bullish, which are impulsing are bullish. There it is. So perhaps within a month or so, that's gonna be one. Then from there, as I said, there could be some distribution there, some correction starting there, and it could still go up there. So we could see some very late distribution happening there before we can see the markdown. Expected to last until August, just about August. Let me just make it August. August is month number 8. Yes, somewhere there. So this could be just until August, somewhere there. So unless if this price just shoot up and then wait for us on the other side. So that's what we're looking at, just way around August, latest August, September. So Q4, the end of Q3, we could be seeing the distribution cycle of the euro dollar coming to an end. Then the markdown cycle begins. So we're expecting to see the beginning of the markdown cycle in Q4, starting from Q4 of 2021, and then continue just like that until January 2022. Should also must be adjusted. So this is going to be the beginning of Q2. So Q2 2021. The Q4. The last quarter of 2021, we should be expecting the beginning of the markdown cycle. The markdown cycle should be starting from Q4, somewhere there, Q4 of 2021, and then it can extend this now to around Q3, Q4. So we may not be at the down around January, but around April of 2022, right? So that's what we're looking at on the euro dollar, just to share with you that these cycles are very, very important. You can see that the euro is beginning and preparing to launch to the upside. This euro dollar pair then will correlate and go nicely with the gold pair, or with gold. So gold is also looking pretty nicely. So gold similarly seems to be following the similar thing. That's our December. That's November 20. This is December 2018. The USD seems like it's holding that. December, October. I think it's October. Right. Let me go October, November 2018. There you go. Right. So in this instance, you can see that gold, again, we deal with this thing in cycles. There you go. So gold has been following this cycle pretty nicely so far. There's nothing that is broken yet, and there's nothing. We just have been adjusting little bit by little bit. If you look at this, gold is preparing, finished the movement to the downside, and there's the first impulse. So I think that it could have found a one, or it can still go look for a one somewhere there at this. It is still at, we know that it's at supply right now. Find one, they come back to find two. Whether it will catch up in terms of the cycles with euro dollar, I don't know. But when the euro dollar will be at that 1.29 distributing, gold will be distributing here. Let me write it for you. So I'm expecting gold to be distributing somewhere between the distribution level of gold will be there at the top, and then from there the markdown of gold begins. Distribution, right? So gold should be distributing. Hope it's going to be somewhere the same, but the price is going to be distributing up to 2,300, right? Somewhere there, some phases of distribution. I don't expect gold to be distributing around there. Anywhere once gold breaks the 1987 back again to the 2,000 level, to 2,300, about 3,000 points, then gold should be starting or will be in a distribution phase. Which distribution phase can see it? I think it's going to also be, let's hope it's going to be Q4. If it's Q4, then we can see lots and lots of selling of the euro, the gold, and the bring back the dollar. I think some people can say bring back the dollar. Please note that all of these are not correlated to the cryptocurrencies. This is just purely fiat and gold. So we have got, on a separate note, we have been monitoring the relationship, the correlation between gold and fiat, and the correlation between gold and cryptocurrencies. That correlation, I will be bringing it one day in one of the sessions, just to show you what happens. But the cryptocurrencies are highly correlated to the US dollar and to gold more than it is to other fiat currencies. So you see that the dollar has been suppressed, looks pretty much suppressed or subdued. So in that case, the money goes into safe havens, or investments go into safe havens. So some of the guys are choosing to put their money into cryptocurrency as safe haven, though many still believe that cryptocurrencies aren't a safe haven at all, because they are heavily and highly, they spike a lot. They're very, very volatile. But the introductions of the Elon Musk, the Richard Branson, the Warren Buffett into the crypto space and bring that bit of a stability in terms of their price. So, and gold, as it is done with gold. So gold is not volatile. It can keep value. It can retain value. You can see that gold does not drop as much as Bitcoin drops. I think that's what the investors are waiting to see from Bitcoins and other related cryptocurrencies or blockchain technology stocks. So that's what we're talking about, right? BSIP is asking, how do I join your trading group? BSIP, just please send us. I think you must be on Telegram now. So Silas, I think send the message. Silas will be sending you his email address. Just contact him and then choose how you'd like to be part of our trading group. We've got an educational group, and then this is the trading group. We do have got two trading groups. We've got the market preview guys who are on a exclusive group who are trading with us every single month, and then we've got the live trading session, which is for public. But if you want an exclusive group, if you want to have to be part of the exclusive group of Opulence FX, please just give Silas a ring or drop him an email. He will get back to you. Mr. Indicator is on the line. He will drop his email address right there. Then you can get in contact with him. You would also like us to look at Australian dollar, Japanese yen. I think this is AUDJPY. AUDJPY, SIP, it's good that you asked about it, though it's not also relevant that much for the sessions in which we are in, because remember, when we talk about London sessions, when we talk about Europe sessions, we only want to deal with Euro assets, where the assets are based on Europe and on the UK. So most of these pairs would not move that much. There is nothing I can look for you. I remember there's another gentleman who asked us that we must look at odd Swiss franc, rather, or at CAD Swiss franc. And there was absolutely nothing on CAD Swiss franc to look at. So, but let me just satisfy your desire. There's nothing to write home about. That's exactly, I mean, I'm on weekly chart. So I usually tell my traders, there's just nothing to do. Leave any pair that does like this, leave it, move away, go look for money. There's just no money there. Okay. This is a weekly candle. I mean, you've got a weekly candle of 50 pips. You know, it's tough. Don't try that. 44 pips, a weekly candle of 44 pips. Never will try that. So there's nothing to look at currently. Just seeing as a consolidation, which is absolutely dangerous for an intraday trader. It will lock your money. Your margins will be locked into this. This is a pair for investors, and they're looking to invest in the Australian dollar for the long term. Remember, this is a long, it's not a short, it's a long term. So meaning that they are buying, they are already buying, they have already bought, in fact. So you are seeing the situation where some people are trying to sell whoever is trying to sell the odd Japanese yen, good luck to them, because the investors aren't letting go of the Australian dollars. They are keeping them. So ask the question, why are the investors holding to the Australian dollars? They are holding them to them right now. You know, there is the odd only falling against the Canadian dollar, but against the dollar, investors are holding to the Australian dollars. Okay, against the New Zealand dollar, there's a bit of volatility there, and then otherwise the Australian dollar against the Japanese yen, the value is held tightly, meaning that it's not worth it for you to be buying a Japanese yen. Japanese yen, remember, Japan is a country that is still in recession, have been in recession. So you're going to be thinking if you're going to be hedging in Japan, or you're going to be keeping your money in Australia and hoping that part of the capital or part of the currency pairs can be used to build some more value for you through the mines. You must know that it's a commodity currency. China procures lots of their coal and most of their minerals from Australia, as they do from South Africa. But there's a lot of value, guys. I just want to warn you, there's just way too much value in the Australian dollar. You can see that the investors aren't ready at all to let go of their capital in Australia. There it is. So, but there's nothing to be done at the moment. I mean, you are late, so you're selling, it's dangerously, it's pretty dangerous to be trying to sell, and it's very also equally dangerous to be trying to buy, regardless of the time frame. I think this is what I want to warn you about, regardless of the time frame. I know that you are looking at this only when the price of gold changes, then can we begin to look at this. So we'd rather be trading US dollar, Japanese yen, than be trading. In fact, I'm just trying to satisfy you there. This price may still go to the upside. All right, so that's how it is. So these guys are negotiating this resistance slightly, but looks like they will succeed to go up and touch the 90.47, the top basically. So be careful if they want to come to the 105. So they should be coming first to the 90. You can see that our projection is that the one should be coming up to there, which is at the 90. All right, and then from there drop further up to this point, which is the neckline, then before it can drop and go up again. But not now, but not now. So we still hoping to see some up, just to share with you there, not relevant to the session. I hope you are satisfied, my brother. I hope this makes you happy. All right. Yeah, I can see that Sib is happy. Right. Even on the chart and even on the information that we give him. What would you like us to look at during this session, the London session? Okay, let's go check what has happened in the meantime. As you there, let's go check what is happening with our. Let's go check what's happening with ours. There it is. So we can still see that there is There's the breakout. There is the breakout. So there they are moving now. Right. There is the move now of the euro against the pound, moving up, not a problem. There is the pound losing hold now. The support has just completely lost its hold on the JPY, and I think we expect the same thing on the pound, on the US dollar. So it lost it completely because the euro kept on pumping to the upside. So now it's coming to the final rescue. If it moves below this point, then it's the negative. Now it's a negative pound, and the euro takes the lead. So the pound could finish on the downside if that's the case. And now we're going to be flipping this because there's no head and shoulder pattern anymore. And then we'll be looking at the downside. How far can it go? And it looks highly likely that it could go to the downside and touch back to and retest the same point it lost the other time. So that's what we're looking at. If it doesn't go to the upside, break this point, then we're looking at the further down, and then the pound against the dollar is looking to be dropping to the 1.40. We are now 140 exactly, about 70 pips to the downside. If it breaks this point, there it is, 70 pips, 80 pips. Right. And then against the yen, just gonna have to come back to the same point. There you go. Just come back to the same point where it broke. So this would not matter anymore, as they say. So the resistance worked, support did not work. So there's the resistance, beautiful resistance. The dollar lost, and now the buyers must go and recoup somewhere around this area. Then we're expecting that the price should be consolidating nicely between there. So we'll see which one will it take it, but still the pound looking bullish against the yen. Just note that. Right, so we could be seeing just a consolidation. If it goes like this, Mr. Morera, there may not be any need tomorrow, perhaps tomorrow for the London session. I think until we meet again on Friday, because we're doing one on Friday. But you just have got to monitor this kind of a wedge, or this kind of a closing triangle or a contracting triangle, which is very symmetrical, by the way. It looks nice and symmetrical. So, but for me, still looking bullish, as I say. Still looking bullish. You see, there it is, still looking pretty bullish. So they could be playing within there, and then from there push up, right from there push it up, and then they can break somewhere later during the week. But I don't see that happening today. Once this price push it to the downside, it's a 30 minutes chart. I don't see any decisive action from the pound. We could be caught on different session, keeping the price just hitting this point. Which session will break it? Usually, if this does not get broken on the good side by the London session, then we'll postpone for the next. Right. That's how it looks like. So there is the delay. So we still are having a bullish consolidating pound going to the downside, but still looking bullish. So what are we looking at, therefore? Looking at the euro. The euro seems to be the best investment for now. The euro will take the session. So that's how it is. Euro to take the session of the London session and the euro session. What would you like us to do? The pound is dropping. So even this one therefore expect that shoulder not to hold. And we can see the shoulder is in deep problem right there. That's deep troubles there. So that shoulder, it's not guaranteed that these shoulders hold. The shoulder holds great stuff. The shoulder doesn't hold. Perhaps the Swiss franc could hold it. We don't know. The session is way too long, and the support is in pain. So I don't know if you can hold on for I don't know if they could hold for the next 6 hours or so of the 5 hours of the session. That's how it is. So what would you like us to look at? What would you like us to look at? Which pair, which index? We're breaking them down, right? No breakout of the pound. Instead, we've got the breakout of the euro. Just note that we've got the breakout of the euro. The money is on the euro. The pips for this session is on the euro, right? That's all I want to say. I know the euro against the yen has been pumping and pumping and pumping. There it is, the euro against the yen, it's pumping. Right, the session started beautifully to the upside. There it's just stopping right now. I don't think it's going to stop it for forever. We're expecting the euro should be going up to be touching the 137, 400 pips to go to the upside. That's how it is. That was just a pushback, pullback, and then from there should be able to continue. This is what makes the euro to be strong, because the Swiss franc has gained strength coming from this bearish flag. That's what the Swiss franc is doing. The Swiss franc is coming from this flag, and there is looking pretty strong. Have made already 1, 2. It could delay some of the investments there. All right, there is the fall, but I think this fall, could it be the last? Only, yeah, there you go. We are coming to the last phase there, but it still have got some few hundred pips there, just about 100 pips. It can still go slightly up before the big drop, and I think by that time the euro GBP will have already reached there, because the euro GBP depends on the strength of this Swiss franc. Like I said, it's a euro pact, it's a tech team. The market always do the tech. So we are hoping for wave number 5 of the impulse wave of this Swiss franc. So in this case, we think the stop of the Swiss franc could be right at the top resistance there, 123.288 or 0.40, whichever you choose. That could be the top. So in this case, we could be, and that would be your wave number 5. Anyway, there could be your wave number 5. Could it break above this point? I don't think so, but we'll see. That's how we have broken it down. Remember, we already have this thing. So the price should drop 400 pips. It's not a signal, because we are not in our signal group. This is just the discussion of the market. No signal given yet. But yes, we're expecting the price of the Swiss franc to be dropping just by 400 pips back to the support, where we will be buying it for another 800 to 1,000 pips. It's not a signal again. If you want more details of this, we do have got market preview every single month. We check if that which we see now will hold for the month. And if we see that probability high, then we put it up. We don't trade everything that moves. We trade only those that will move with volatility and with probability to the right direction. That's the difference. The difference is right there. Okay. So our market previews are happening. We are already in the third week of June, and we have already made just over 500 pips trading the Nasdaq. If you're trading with Veracity, 500 pips in the bag, just buying the Nasdaq for 2 weeks, no sell, only buying the Nasdaq from the very low, and now it has moved in 2 weeks, 500 points, and those points are in the bag. I cannot say more. So we still have got 3 more to take. If you want to join us for the market previews, again, please don't miss. We do have got them on the other side, exclusively for those who are partners with Opulence FX and who are trading with our partner traders, Exit Trader and Veracity Markets. So let us know if you'd like to join our market preview every single month. 4 or 5 charts, one direction for the whole month. Take opportunity of the markets. I've not done with indices now. Perhaps between now and 1:30, we started at 10, so 11:30, we should be closing the session for the day. So let's see what we have on the session side, on the indices side, right? Right. During the session, which is the Euro session, London session, we look at the Euro stocks, the entire Euro stocks, perhaps. Then we also look at the I think this should be fine up today. Something should have stopped it there. There's a soft line, yeah. We look at the Euro stocks and the indices, usually the Euro indices. They've got the German DAX on a 4-hourly time frame. You can see that the German DAX is doing the record highs, leading the global. In fact, it is leading the global stock market. The Germans have been, or the German companies have been, the German top 30 has been doing miracles, completely gone above the pandemic levels. From the drop to the bottom, they must have recovered just over 60%, or gone up 60% from the pre-pandemic levels. All right, so I think that's what I want to show you right now, that the German top 30 have already gone about 60%. I think, yeah, it could be just about 60%. They've done well. Not yet. I think they've just done about 40%, the way I look at it. The 60% is still coming, and they could be wanting to push to the 60%. When they reached 17,000, they would have reached they would have already gone above, 60% from their previous point since the drop. So that's how we look at it. So that's how it's looking like. But if you can look at on H4, it seems like it is reaching some momentum. Even during this session, there is some resistance there that this price has found. So it's gonna be tough for the German DAX, though they push. I think I've given a signal or an alert of a buy around 15 and closing it around the same point in the previous New York session. Doing the same thing here. So there is finding some resistance there on a bearish divergence, not a good thing. So one does expect that it doesn't have to be going through this. The German 30 must just let go, just give profits, let the price drop, and then we can catch it nicely, all of us, but not at those prices. We can catch it at lower prices, and especially if it can become, just do a special, and just drop nicely back to the 14,000. So we really need that 1,000 drop. Then we can invest ourselves also in the German companies, the German 30. So that's how it is. But I think it's way too overvalued. We are looking towards getting a discount. Some of us who like cheap prices and big value, we would be happy to have something like that. So we would be waiting to buy lower. So not many people would be wanting to buy at that price, but there's still value, as I'm saying, there's still some value of 2,000 points, but not to buy there. So sorry, if it breaks this rising wedge of the 4-hourly charts, then it's easy. If it jumps above this, then it's gone. Then it's gone. Then it can get that 2,000 points to the upside. I mean, just 1,000, not 2,000, just last 1,000 points. So it goes up 1,000 points from here, or it drops 1,000 points. I'm preferring the drop. If it goes 1,000 points up, I will definitely sell it after this 1,000. Either way, whether it goes 1,000 points up, I sell. It drops 1,000 points down, I buy. I prefer to be buying than to be selling. This is an index. The USD 500 similarly broke above yesterday, and there's a beautiful buy. Should be continuing to the upside today. The Hong Kong 50, definitely a beautiful flag there that seems put it to be advantageous. There it is, beautiful, beautiful test even this morning, of this flagging beautifully up, waiting for the flag to break. And this one broke out. I've been monitoring this. That's a breakout. Gone. Right. The Hang Seng, the Japanese 2025, definitely gone. No option to retest. If you're hoping for the retest, it may happen, it may not happen. 2 days outside, yesterday and today. The Frank 40 could be dropping. There it is. Just be waiting. There it is going. But I don't think, just like the German 30, I don't think that they should be going up and up and up. They're just going to be going up to find resistance, and resistance could just stall that. The only way to go up is to keep grinding, slowly but surely. The Euro 50, Still looking bullish. Again, not to buy there. I would wait for it to still go up and touch the 4,200 level. We are to 4,100. Another extra 100 points, then we can consider selling. Until then, we will wait for you to drop back to the same level that we should broke out. Then we will go for it somewhere there, but it is grinding to the upside. Not a good chart structure, not good, but otherwise value, lots and lots and lots of it. And the Chinese still are having the opportunity to go to the upside. There was a drop yesterday, but don't hope that should be having further drops there. I think it's just some sentiments, negative sentiments that can be corrected once new capital comes in. And the Australian dollar has just freshly broken from the pre-pandemic level. Lots of value to the upside on the Australian 200. Lots and lots of it. There it is. New breakout. Beautiful. Just entered a new zone completely. Any investment, I would go for this one. So yeah, I would go for the Australian dollar there. So looking beautiful. That sums up our indices for the Euro session. Otherwise, Silas, I was thinking that we could do as promised the New York session with the guys today. Looking at the news, there's not too much fundamentals that will be coming up this afternoon, but there is beautiful fundamentals expected, massive fundamentals expected tomorrow at 8 p.m. For the FOMCS minutes coming up tomorrow. So I would suggest that we postpone our New York session for tomorrow. We're starting from 7 p.m. or 7:30 and monitor on how the forms will be doing. And then we can see if there could be not trading opportunities available there for the interest rate decisions for the US and also for the form statements. So I think it's going to be very good to monitor those together tomorrow. I don't know what you think, but otherwise I'm done. We are done today, guys, for the London session. If there are no any more further questions, this is the sum up of the London session for this week. Otherwise, we meet again, rather for today, we meet again on Friday. I think it's a Friday. And then tomorrow I think we'll do the New York session tomorrow, shortly before the news coming from the statement of the Fed, the monetary policy statement of Fed, and the interest rate decisions, which the market expect that they will keep them. Let me just check. I think they expect them to be kept unchanged. I've never checked that, but I know there's big news coming tomorrow, 8 o'clock. Silas?
Yes, I'm happy with tomorrow's arrangement, sir.
Great stuff. There it is. So it's gonna be the form statements tomorrow. Yes, monetary statement one day. They have expected that there will be no Fed interest rate decision change. Yet the economic projections will be big. American economic projection, the super economy of the world, and the monetary policy statement and the press conference. So it's gonna be pumping. Stocks will be moving. Currencies will be moving, metals will be moving, possibly even cryptocurrencies could be moving, because now we can link up cryptocurrencies to the US dollar now. So let's wait until tomorrow. Let's start tomorrow 7:30. Send the link to everybody. Let us see on the impact of good fundamentals on technical trading, and if the opportunity presents itself, let's make pips. Until then, cheers, guys. Let there be pips.